Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be looking at the inverse head and shoulders pattern, also known as the head and shoulders bottom reversal pattern. Don't let this chart with all the annotations on it spook you. It's really not as complex as it looks, and I'll simplify it for you. The inverse head and shoulders pattern is basically the head and shoulders pattern upside down, or turned on its head, if you will. It's really quite simple. If you know what the head and shoulders pattern is, then you know what the inverse head and shoulders pattern is, because that's, like I said, it's just upside down. The only difference, or the biggest difference, is that confirmation volume on the head and shoulders pattern is important, but in the case of the inverse head and shoulders pattern, it's paramount. You must have it, okay? Let me show you what we have here. First off, we're looking at a downtrend. You have to have a downtrend in order to have a reversal or an inverse head and shoulders pattern. So if you don't have a downtrend and you think you're seeing an inverse head and shoulders pattern, you're probably not. You have to first have a downtrend. In this case, we have that right here, right? Nice move going lower. We know it's a downtrend because the high points are going lower every single time. The low points are going lower every single time. It's trending down. In this particular case, at the bottom, we have a inverse head and shoulders pattern. First shoulder, or the left shoulder, right here. Okay, comes up here. The head goes lower than the previous low point. Right here was the previous low point, left shoulder. And now we have the head going lower. You have to have that. Okay. And then you have the right shoulder formation. Now, in both cases of the head and shoulders pattern and the inverse head and shoulders pattern, typically you're going to see the low of the right shoulder and the low of the left shoulder roughly equal with one another. Okay, that's right. They can be cattywampus, if you will. They could be slightly skewed in one way or the other. Either the right shoulder could not be as deep, could be a little bit shallower, or it could be even deeper than the left shoulder. But in most cases, they will be symmetrical. The neckline of the inverse head and shoulders pattern is formed just like the neckline on the head and shoulders pattern. You basically look at the start of the head, or the reaction high of the left shoulder here, and at the end formation of the head, or I should say the reaction high, the end formation of the head, and the start of the right shoulder, those 2 points. You could draw a trend line across those 2 points, and that will be an important element for you. It's known as the neckline. I've marked it right here. Okay, the neckline can be in different angles. In this particular case, we are showing a downtrend here. If it had been pointing up, let's just say that this head had gone up higher and then pulled back down like that, you would have one that was trending up. This would be a more bullish reversal signal if it was pointing up. Because it's pointing down, it's less bullish. Okay. All right, let's go ahead and draw this thing out again. Left shoulder, head formation, right shoulder. Okay, and this neckline right here is paramount because until price activity breaks above that, closing above that line, you do not have a confirmation of an inverse head and shoulders pattern. Okay, it is not complete until it is broken through that, and that's true with the head and shoulders pattern as well. And in this particular case, though, it's going to be paramount that you see increase on volume on that breakout. Remember, every time you get a breakout, you want to see volume confirming that that's buy pressure breaking out above there. Otherwise, you could be getting yourself into a situation where you have basically a false rally and a setup when you end up trading the wrong side. Another thing to note here is when you're looking at the neckline, you'll notice it was finding resistance. They have marked it resistance here and here. But once they broke out above it, it's quite common to pull back down and test that neckline, and you'll find support that time around. Okay. This creates a secondary buy opportunity. So if you don't buy on the exact breakout point, and you'll oftentimes get an opportunity to buy in on the touch or test of the support of the old neckline. Volume levels on the formation of the initial left shoulder here should or can be extreme sell pressure in that time period. It's selling is still very strong right there. That's fine. Doesn't actually have to happen. The first half of the formation is not as important as the second half when it comes to the volume point. All right, so just keep that in mind. Volume is important, but it's more important on this side of the pattern as opposed to this side over here. Okay. One telltale sign I like to watch for whenever I'm looking at the inverse head and shoulders pattern is just the argument between price and volume. You'll notice here when you pull down to this level at about 32 on this particular chart, then bounce back up. Note the volume level that you're seeing here. Okay, except for this one day, it's all pretty small. And then you pull off way down here, lower than previous. So price is falling lower, telling you that there's even more sell pressure. However, volume here is actually increasing on the buy side, and that's telltale that this will not be a sustainable move to the downside because buy pressure is increasing rapidly, and that's going to force what? It's going to force the price to move back to the upside. It pulls back down again, and now you'll notice that we're not going lower, so we've seen a potential reversal, and again, the breakout confirmed by the buy pressure. As in the head and shoulders pattern, the inverse head and shoulders pattern can give you a target based on the extreme high point, or in this case, low point of the head at 26 in this case. Draw a straight line from that point all the way up to the neckline. That distance, or that amount of move there, will be duplicated from the breakout point. Here's the breakout point where price closed above that neckline, so you can take this distance and expand it here and get a projection of how much or how far you think price is going to go. Remember, that's just a target. It's only a guide, not to be, I expect it to go exactly to this penny. That's not actually very wise, okay? So look at it this way as being something that you can use for a target, nothing more, but it gives you an idea of what to expect when you do see one of these break out and start moving to the upside. One more item to note regarding the inverse head and shoulders pattern, also on the head and shoulders pattern itself, from time to time, one of the telltale keys that you'll start to see is if you draw an older or a longer term trend line, you'll notice from this high point to this high point, you can draw a line there and draw it out, and you'll see that the pattern will start to break through that, and that's telling you that this is starting to weaken. The downtrend is starting to weaken. So when you break out above it and come back up here, and you're no longer respecting it as resistance, you're now treating it as a support. That's another way of spotting these developing, okay? Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.